All right. So the first thing I want to let you know about trading Forex, trading in the global financial markets, one thing you should know that it's risky. All right. It's a high, very high risk place when it has to do with losing your money. So you can lose your money. Now, we've had people who have lost everything trading Forex. We've had people who have packed back to the village. We've had people who have just lost it all. Why? Because most persons believe, Forex is a get rich quick scheme, but it's not true. Now, you want to become a lawyer, you go to school for 5 years. As if that's not enough, you still spend another 1 year law school, all right, before you are called to bar to become a lawyer. You want to become a doctor, same thing, you do 7 years and still do another 1 year housemanship before you are confirmed a doctor and you start practicing. Any course, any endeavor you want to find yourself in, you want to go to school and make sure that you are certified and before you start. But when it comes to Forex, everybody just want to jump in and make the money. But the truth is that it doesn't work that way. When you talk about Forex education, it looks too long a thing for people to embark on. And Forex education is not even what you become a professional in 1 year, 2 years, or 3 years. The language is that you can only get better as you are developing yourself on a daily basis. Okay? So please don't take that area for granted. And another thing I want to urge you is that you may have all the money to fund your account, no problem. But as students, the first place you need to work with is your demo account. That was why I said, create your account, create your demo, and make sure you log in. So every practice, everything you'll be learning, you learn it on your demo account, all right? So you get some ground, you master some ground before you go live, even if you'll be given signals, you'll be given other guides that will make you make money while you learn, but you need to actually position yourself by doing the practical. There is no footballer who has made it theoretically. Every footballer is always at the pitch, for practice, all right? So in the same vein here, if you like, hear everything theoretically. If you do not play with the shots, all right? You do not play with your account, you won't, you remain at a spot. So you must play with your demo, you must buy, you must sell, you must analyze everything you have learned. You want to make sure that you put them into use and into play, and that's how you get it. All right, so this is actually the table of content. As you can see, okay, so broker, instrument. So these are names. All of these are the names you'll be hearing, okay? And you need to know all of them. So broker, all right, instrument, trading session, spread, leverage, trading window, balance, equity, margin, free margin, margin level, margin call, and all of that. Candlestick anatomy, all of this, all right, are what we'll be going through in the course of the journey. And I also have, okay, so today we'll be doing, okay, broker, instrument, trading session, spread. All right, so we'll be ending at trading window. Okay, so let's go straight to business. All right. So who is a broker? Who is a broker? Now, a Forex broker is a financial service company that provides traders access to a platform for buying and selling foreign currencies, also known as Forex or FX trading. In Forex markets, okay, that is in the Forex market. In Forex markets, currency are traded in pairs, e.g., Euro USD. So you don't trade a single currency. All right. What you trade is a pair. So you are trading one, you are buying one for the other. all right, GBP, JPY, okay? And brokers act as intermediary between retail traders and the interbank system or the liquidity provider. So now let me just break it down. If you have changed dollar before through the Aboki, what the Aboki has done is the Aboki has stand as a broker. Okay. Now, if you have a dollar and you are changing it, you go to Aboki to change for Naira. What the Aboki has done is he has stand as a broker. Now, the thing with the broker is that the broker make money whether you are buying or you are selling. So if you have dollar you want to sell, the broker will make money. You have Naira, you want to buy the dollar, the broker will make money. And there's a difference between the buying price and the selling price, okay? One is called the ask, the other is the bid. All right, so the difference between this price is what is called spread. Okay, that's what is called spread. And that spread is how the broker make their money. So that's how the Aboki make their money. That's the difference between the buying price and the selling price. That's how they make their money. So the broker gives you the platform to trade. Now, in the case of Aboki, Aboki has the money physically, you have your money physically, and you go to him or her and exchange. But in the case of the Forex market, you're dealing with the global financial market, and the broker acts as an intermediary between you and the interbank system, okay? All right, so you cannot trade Forex without a broker. So the broker we are using presently, which all of us here has created account with, is WellTrade. So WellTrade is a broker. Okay, so here's what a physical broker, here's what a Forex broker typically does. Number one, provide a trading platform like the MetaTrader 4, MetaTrader 5, or a proprietary platform. Now, when we say proprietary platform, is a personal platform owned by the broker. So each of these brokers, some of them have their platform. It is called WebTrader, all right? So WebTrader, you can trade directly on the broker's website, connecting to the WebTrader. Apart from MT5 and MT4, we also have the trade locker. We have what's it called again? There's another one, I used it very well, actually, was the one who shared it so well in this part of the world. Okay, so that's CTrader, okay, that one is CTrader. 2021, 2022, actually did a lot of education on CTrader, South, Southeast, because for you to use CTrader, even if you have used MT4, MT5 for a while, you have to go to school, you have to learn it again, okay? So offer leverage, allowing traders to control larger position with a smaller amount of capital. Now, what leverage does is, now the broker gives you a leverage. When you were creating your account, you saw leverage, right? Okay. In the case of the financials, all right, which is your pro account, you have leverage as 1,000 locked. Then in the case of synthetic, I think it was 10,000, okay? So that is leverage. What it means is that your $1 that you brought into the market is seen as $10,000 in the case of the synthetic. While in the case of the pro, your $1 is seen as $1,000. Okay, because you are going into a pool and your $1 will not see your $100, your $200 is too small to trade that market. So what the broker has done is to give you a hand, all right, for you to enter. So that leverage has its own, is a double-edged sword, all right. Now, because you have that allowance, if you enter trades and the trade go the other side, if you have a large spread, I mean a large leverage, your account can easily be blown. Okay, we'll get to that area. We'll talk about that one more. Okay, so the broker also facilitates your deposits and withdrawals. The broker facilitates your deposits and withdrawals. Okay, now the deposit and withdrawal you are doing, you are depositing to the broker. So it's a broker that connects you to the interbank system where everybody connects to. Okay. So the broker charges spread or commission on trades as their primary fee structure. Now, the broker does not collect money from you in any other way. The broker collects their money through what is called spread. And when in choosing a broker, there's a way you grow in this system, you want to choose a broker wisely. Now, there are brokers with very high spread, all right, and there are brokers with tight spread. Now, the tighter the spread, the better for you as a trader. So take, for instance, now you go to Aboki to sell your $100, all right? And the spread, okay, you are buying or you are selling. So let's assume the spread, which is the difference between buying and selling. If you have it as maybe 10 Naira, and another person have it as 17 Naira as difference. You who is on the other side, let's just say you who is selling, you would want to be on the high side, while the person buying would want to be on the high side. But in the Forex market, whether you are buying, you are selling in a particular pair, it's the same thing, all right? Okay, so the tighter the spread, the better for you, because the spread is going to be collected from your money. So when you enter a trade, the spread is put aside as margin. That is, something is set aside as margin already, and that is where the spread will be collected from. Okay, so you don't want someone to be collecting big, something heavy from your account. You want a very tight one, because that one is also seen. So now, one thing with spread is that, let's assume we take a trade and I said TP is 1.556. All right. Now you may be using a broker that the spread is as high as 3 pips. Meanwhile, another person is using a broker that the spread is just 1 pip. Now, the person that the broker is 1 pip, his own will hit take profits, and your own is yet to hit take profits. And if care is not taken, if there is a reverse in that case, your account, your own trade will not hit take profits. Meanwhile, other people's own have hit take profits. So that is the advantage of making sure that you get a broker with tight spread, okay? May offer additional service like market analysis, educational resources, and trading tools. And most of the brokers in recent time all offer education, market analysis and trading tools. If you go to Facebook, you see almost all the brokers advertising events, advertising training, and all of that. Why? Because if they don't do this to support their clients, they will lose their clients. So clients tend to go to where they have all of this support. So brokers in recent time does that. All of them does that presently. And that's the same thing the partners also do for them. All right. The partners try to make sure that they provide education, they provide, which is what I'm doing right now. I'm doing it for World Trade. All right. I'm bringing people into World Trade platform, and I'm pushing for World Trade, doing all of this. This is the same thing the broker does directly too at their own level. All right, so that is for the broker. So if you do not know broker before now, the broker is actually the person that stands as an intermediary between you and the market. Simple. All right, so let's look at the next one, trading instruments. Trading instruments. So what are trading instruments? So trading instruments are different types of assets or contracts that can be bought, sold, or traded in the financial markets. They represent various ways traders and investors can participate in markets to try to make profit or hedge risk. Okay? So now, in the Forex platform, basically what everybody knows is Forex. Forex, when you talk about trading, people are talking about Forex alone. But what is traded on that platform is not just Forex, okay? There is more than Forex. Forex is just foreign exchange, which is on currencies alone, okay? So, but apart from currencies, other things are still traded on the same platform where the currencies are traded, and they are all called instruments. Okay, so they are called trading instruments. So the currency pairs, they are called trading instruments. So let's look at them. So these are them. Okay, so here are some common types of trading instruments. Stocks. Now, you see shares, all these companies that have shares, you know, all right, those stocks are actually traded. All right, Apple is traded. All right, Netflix is traded. Most of these big names, you know, Oando is traded. All right, oil and all of the others ones are traded. Then bonds, debt security issued by corporations or government to raise capital, they are traded in the Forex market. You see all of this as time goes on. Then foreign exchange, which is the common one you and I know that we are all talking about, which it has to do with the currency pairs, okay? That's foreign exchange. Then we have commodities. Now, commodities are physical goods like gold, oil, silver, or agricultural products. Now, you are trading these commodities. You don't own them physically, but you are trading on their price as it is in the market. Okay? So let's take gold, for instance. Now, gold is an asset. All right? So gold is in the gold reserve, but its price is not stable. And gold is one of the highest assets as safe haven. Okay. Now, when the market begins to dwindle, when there tends to be uncertainty, people tend to move their money to gold because gold is a reserved commodity. All right, it's a physical reserve commodity. So people move their money to gold. So this is the price we are trading in the financial market. So you can trade the price. Is the price going to go up or going to come down? Oil is traded. We're talking about the oil, the petroleum oil we're talking about. So it's traded. Silver is traded. The agricultural products are traded. So we have derivatives, all right, and the CFDs, all of these are traded. The option like futures, options, CFDs. CFDs is contract for difference. All those are big names. You don't need to bother your head with all of these ones yet. It's too early, but just for you to know all of these things. So we also have ETFs. ETF is exchange traded funds. Okay, so funds that track an index, commodity, or sector and trade like stock. Then we have cryptocurrencies. Okay, cryptocurrencies are also traded in the Forex platform. Okay, so we have indices. Okay, indices are a measure of the performance of a group of assets like the S&P, Dow Jones. Okay, all of those are the US indices. Then finally, we have the synthetic indices. Okay, we have the synthetic indices, also called the synthetic market or simulated markets. They are computer-generated financial markets that simulate the real-world market behavior. They are often used for trading on platforms like Deriv, WellTrade, or similar brokers. Here are a breakdown of what they are. Key features. So we're talking about the synthetic indices now. Key features: simulated by algorithm. What it means that this thing is controlled by algorithm. Algorithm is an English. That is computer, that is IT. Leave it, don't bother your head with that one. Okay? Say prices are generated by random number generators. Okay? RNGs, often with verified fairness, available 24/7. So while other markets run Mondays to Friday, the synthetic indices runs Mondays through Sundays. There is no holiday, there is no weekend. Even on Christmas Day, I made money from the synthetic market. This last Christmas, I still traded and I made money from the synthetic market. So there is no holiday, there is no weekend on synthetic indices. Unlike the real market, they are open all the time with no holidays or weekends. Different volatility type. Common types include volatility 100, 25, 50, 75, 100, or crash and boom 500, 1000, each distinct movement patterns and risk profile. No real world assets behind them. You are not trading stock, you are not trading Forex, you are not trading commodity, you are trading on pure artificial price movements. Used for practice and strategy trust testing because they behave similarly to the real market, but are unavailable at but are available at all times. They are popular for backtesting and training. So what are the pros and cons? Always available, fairly consistent patterns, no market news or event to influence prices. Now, in the Forex market, in the crypto market, there's what we call fundamentals. We're going to get to that in the course of the journey. Now, in synthetic, there is fundamentals does not affect the market. Now, fundamentals are economic news, all right? Then we'll talk about politics, talk about natural disaster. Okay, take for instance now, say in US, there's an earthquake, all right? It will affect the dollars, okay? Or maybe during the US election, the general public, maybe let's say 90% of the people were hoping and believing that, oh, Mr. A will win. And it happens that Mr. B wins. Now, there is a way the market will behave at that time based on sentiments, you know. So all of those ones are called fundamentals, all right? Okay, so, but in the synthetic market, fundamentals does not affect the market. Cons, not regulated like the real market, can be highly volatile. When we mean volatile, that's the prices can run pium, 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 and all of that, but you just need to master how they work. So trading session, all right? Each of these are bullet topics, all right? The bullet where you have the green, you know, standing alone is a bullet topic, the way I've highlighted them on that timetable, and we'll be working with the timetable for fairness, okay? So trading session. Now, every market has a time, all right? Because the world is actually in a circle and it rotates around the sun. So where some persons are having sun, other persons will be having moon. While some are sleeping, some are awake, okay? So the market, when it's open in the US, is not open in some areas. When it's open in the UK, is not open. So they have different sessions, and they also have sessions that overlap, okay? So trading session refers to the specific period when financial markets are open for trading around the world. Those sessions are important because different markets have different level of volatility and liquidity depending on the time of the day. Here is a breakdown of the 4 major Forex trading sessions, but these can apply to other assets too. Now look at the language. The session basically are on currencies, all right? The session, all these currencies belong to different countries, okay? But they affect other markets as well, especially the US, which is the USD, affects almost every market because every other thing, the US is the global reserve currency, okay? So everything that happens to the US dollar affects almost everything. Okay, so we have 4 different sessions. So we have the Sydney session, The Sydney, which is the Asian Pacific. That's where you have AUD and NZD. So the New Zealand, all right, and Australia, all of them are in that category. Okay. So we also, so the market opened 10 p.m. GMT. All right. Okay. 10 p.m. GMT is the same thing Nigeria time. Okay. All right. Nigeria, yeah, 10 p.m. GMT, yeah, the same thing Nigeria time. So it opened 10 p.m. GMT Nigerian time on Sunday. On Sunday. So the market opened on Sunday, 10 p.m. All right. And closes 7 a.m. So now this opens every day, but to start the week, all right, it opens on Sunday, 10 p.m., all right, and closes 7 a.m. the next morning, okay? But the market opens 24/7, but while some of the sessions have closed, some other ones are opening. So that's what makes the market run 24 hours for the 5 days in the week. Okay, so marks the start of the trading day, often quieter. That is a very quiet session. There is no much liquidity, market is slow, no serious movement, you know, but can be active when there are news from Australia, New Zealand, and Japan. So when there are some news, you know, you just see some spikes within the session. So we have the Tokyo session, which is the Asian session. That's where you have the JPY, which is the Japanese yen, okay? The market opened 12 a.m. GMT, which is 12 midnight our Nigerian time, and closes 9 a.m. the next morning, okay? Major players are Japan and other Asian markets, okay? So that's, you have pairs like USD JPY, AUD JPY, all of those things attached to JPY, they are more active in that period. Then we have the London session, okay? The European is the London session. Open 8 a.m. GMT, which is our Nigerian time. Open 8 a.m. GMT and closes 5 p.m. GMT. All right? So the biggest session in terms of volume, London overlaps both the Tokyo and the New York sessions, providing high liquidity. Now, let me explain the word overlaps. Now, if you observe, if you look at what I just showed you, now, if you are not seeing your screen very well, make sure your screen is on landscape, okay? If your screen is on landscape, you'll be seeing everything clearly. But if you leave it on what do you call it? On the other one, you may not be seeing everything. So you put your phone on landscape so that you can be seeing the screen very well, all right? Okay? So 9 a.m. So now the London session is opening. The London session is opening at 8 a.m. Meanwhile, the Tokyo session is still open. So what that means is overlap. All right. Yeah, portrait. God bless you. What that means is overlap. So that's between that 1 hour, it overlaps. And now, London session and the New York section also overlaps. So, say the biggest session in terms of volume, London overlaps both Tokyo and New York session, providing high liquidity. Now, what is liquidity? What does high liquidity mean? That is when there is money, so much activities in the market. All right. So when there is liquidity, there is also volatility. All right. So that is volume. There is so much money available in the market right now. So a lot of activity, a lot of trading. You can enter a trade now, and in another 30 minutes, 40 minutes, 1 hour, 2 hours, a trade has closed. But if you enter a trade in the Asia session, and that trade may stay another, 12 hours, it has not even moved from one place. All right. So that is what high liquidity plays. Okay. Say major pairs like Euro USD, GBP USD, USD CHF are most active here. Then we have the the New York session. All right. The New York session opens 1 p.m. GMT, which is the same time, 1 p.m. Nigerian time. So you can see that while London session closes 5 p.m., between 1 p.m. and 5 p.m. is an overlapping between the New York session and the London session. You get it now? It's an overlapping between the two sessions. So the volume in that market is huge. All right, the volume in that market is usually very big at that time. Okay, so activity, high volatility, you know, the market is booming. Just like, let's use oil market, for instance. Okay, oil market is noted for Wednesday business. Now, because on Wednesday, people come from Aba, come from Onitsha, come from different places, bringing different stocks to sell. So the market is usually full and everywhere is blocked on Wednesdays compared to other days, you know, which is just normal market and all of that. That is how the overlapping does in the global financial market, in the Forex market. Okay, so this is the second most liquid session of the market. The US economic news release often cause big moves equally, especially in the USD pairs. Now, one thing you need to note is that USD is paired with almost every currency. So that's why anything that affects the US currency, anything that affects the US, being politics, being disaster, being natural disaster or anything, all right, it affects that particular pair as well. Okay, so key overlap, high volatility time. Say London and New York section overlap between 1 p.m. and 5 p.m. Most liquid and volatile periods, which is what I mentioned earlier. So Tokyo and London overlap 8 a.m. and 9 a.m. Short overlap, but can be active. Said it earlier. Okay, so now we have come to spread. I believe actually I have explained this spread when we're talking about broker. I broke it down. All right. So it's just the same thing I have explained. Okay. So spread refers to the difference between ask and bid. Okay. Sorry, I'm trying to check something. Okay, so spread refers to the difference between the bid, which is the highest price a buyer is willing to pay. Okay, so just like you want to sell your naira to an aboki. Aboki is telling you that it's 1,650 that is buying, and you say no, you want to sell 1,700. Aboki said no, the highest I can buy is 1,650. Okay, so that is the highest the person can buy. So that is actually the bid price. Okay, then the ask is the lowest price the seller wants to sell. Now, you, the seller, you have said you want to sell your naira, your dollar to the bookie for 1,007. Okay, so that is what you are willing to sell. But in the market is not just controlled by you who will say this is what I want to sell or want to buy. It's there are factors in the market that, you know, position this thing, and the brokers based on their platform and their offering tend to just do this, because now in your own case with Aboki, you are the one buying or selling, so you have to hold your own, Aboki hold his own. But in the case of this one, the broker is the one that is setting it. So you don't have a say to say, oh, you want to buy, so this is what the spread should be, or you want to sell, this is what the spread should be. The spread, everything is set on the system. So here's the breakdown. Bid price, what buyers are offering. Ask price, what sellers want. Spread, ask price minus bid price. It's simple. So why does it matter? Why does spread matter? Okay, tight spreads, I explained this earlier, okay? Tight spreads is small difference, more liquid market, lower transaction cost. So you are paying less to enter the market. If the spread is tight, you are paying less to enter the market. But when you have a wide spread, you are paying so much. So let's assume you are entering the market with $100 and you are paying a spread of $10. So your $100 becomes $90 already. So for you to make money out of the market, you have to make $11 and above to have made money. If not, if you make $9, you are still losing $1. I believe you cashing it the message very well. Okay. So widespread, say large difference, less liquid markets, high transaction cost, e.g., small cap stock, exotic currency. Now, most of these they are usually different between the pairs anyway. There are some pairs called exotic. Those exotic pairs, because they are less traded, okay, their spread are usually very high, okay, because they are less traded. Now, there is pair like USD NGN, that's USD versus Nigerian Naira. It's traded in the forex markets. All right, we'll see it in the course of the journey. I'll show you. You see USD NGN. You see USD MXN, Mexican peso. You see USD ZAR, that's USD ZAR, that is a South African rand. Okay. So those ones, their spread are usually very high, unlike the Euro USD, GBP USD that are most traded. Then even these ones, during when the market closes or during the Asian session, their spreads are wider because the market participation is low. So the spread are also wider. So that makes you choose the time to trade as well. You want to trade when there is high volatility, when there is market overlap and all of that. Okay, so factors that affect spread, which is what I was already explaining. Liquidity, more trading volume, tighter spread. Volatility, during high volatility, spread can be widened. Okay, market hours, spread are often wider outside peak trading hours. So I've talked about the peak and overlapping. So when it is off those hours, spread are wider. Okay, so instrument type, okay, forex, stock, commodities all have typical spread range. Their range are different. So the spread for forex is different from the spread for stocks, for commodities and all of that. Their range are always different. As you go in the course of this journey, you'll be seeing them and you'll be seeing the difference. All right, let me drink water, please. Okay, so we have trading window. Trading window. Now, trading window is on your MT5. You created your MT5 today. For those of us who are just starting, you created your MT5 today and you saw on your MT5, it has quote, it has chart, it has trade, it has history, all right, and all of that. Now, where you have your trade, that place is called the trading window. Okay, so that trading window has some things you need to know on that trading window. Okay, so we have the balance, equity, margin, free margin, margin level percentage, and all of that. Those are the things you see on trading window, and you need to know them. Okay, so in MetaTrader 5, which is MT5, the trading window refers to the section where you can execute and manage your trades. So to execute means when you want to buy and sell, that is called to execute, all right? You want to click buy or sell, that is execute, okay? So I'm going to show you that on my phone shortly. And okay, so symbols. So here are typical, it's okay, so here typical, here's what you typically see in the MT5 trading window. So symbol, okay, symbol are you see them as quotes, all right, Euro, USD, gold, stock, you see them, then volume, then lot size, position size, all right. Your lot size or your position size, which you wish to trade, then type, market execution. So for type of execution, type of order, you have market execution, which is instant, all right? We call it current market price. Okay, so market execution is that you just click buy or sell instantly. All right, it's called market execution. Now, some firm will call it instant order, some will call it buy by market, some will call it, depending on the. All right, so it's you selling immediately on the current market price. Now, there's also another type of order called pending order. What pending order does is that you give an instruction to the system, and the system will execute your trade when that condition is met. Okay, so pending order sets to trigger at a specified price. So let's assume we have the buy limit, we have the sell limit, we have the buy stop and sell stop. Now, what this means is that for buy limit, the market is selling, but you want to buy. And you know that when the market gets to a particular price, it will have issues continuing downward. And from there, you can buy from there. So you have considered that place as the lowest point where you can enter. So you buy at a low price, okay? So you become that place, you set your buy limit. So when the market sells to that place, what happens? It will trigger at the price you have put as your buy limit, and the market will continue to buy. But if it happens that you have set your price at that place as buy limit, and instead your trade has triggered, your trade has triggered, but the market refused to buy and it continued to go down, so your trade will be in negative. And that is why we have something we call take profit and stop loss. So if it happens that even after your trade triggers and it's still going down, it's still selling, you already have a stop loss. If you hit stop loss, it will take you out of the market to say, okay, that's the much you can afford to lose on that trade. Okay, but if the price did not hit your stop loss and your market goes up the way you predicted it, okay, if you hit your take profit, you take your profit, or you might be satisfied with the profit even before you get to your take profit, you can actually close your trade in profit, okay? So we have buy limit, sell limit. The reverse is the same for sell. Then buy stop and sell stop. Now, buy stop is the market is buying. The market is buying, but you are not sure of the buy yet. You want it to cross a particular price before you be sure that, yes, you cannot confirm that this buy is certain. So you don't want to buy at a low price. You want to buy at a high price. Your reason is that this price that people are entering the market now, the market will still crash. But you know that if the market crosses a particular level and you enter, from there, the market is going to move. So you don't want to buy below, you want to buy in front, okay? So let me just make a vivid scenario now. For those of us who are in Port Harcourt, so let's assume you are going to Garrison from Rumola. Okay, you want to go to Garrison from Rumola, and the market now is at Rumola. I'm using the market for instance now. So you want to go to Garrison from Rumola, but you don't want to enter vehicle in Rumola. You want to get to what's the name of this junction? GRA Junction. You want to get to GRA Junction before you enter cab. You want to cross GRA junction. Why? Because you believe that the traffic in GRA junction can keep you for the next 1 day. I'm giving an instance, an example, an analysis, analogy. Okay, you believe that the traffic can keep you there for another 1 day, but if you trek past the place and cross to the other side before you enter, your journey to Garrison is just maybe 2 minutes, 3 minutes. You're in Garrison. So that is what buy stop means, and it's the same for sell. The reverse is the same. Okay, so that is pending order. All right, you will see them practically when we get to that stage. Then now we have stop loss and take profit. Now, stop loss and take profit are leveled. You preset on your trade as soon as you execute the trade, so that whether you are there, you are not there, as long as you have set your take profit and your stop loss, the market will do what it wants to do and keep your money for you if you hit TP, and keep your balance for you if you hit stop loss. Okay? So you don't want to just leave your trade to run any way you like, because the trade can as well run the other side and your account will be liquidated. Okay, so preset levels to automatically close your trade at a certain loss or profit. Okay, comments optional. These are, we're telling you the trading window. Now that's what is available on your trading window. Okay, you can leave a note regarding the trade. Then deviation, all right, define how much slippage you are willing to accept in points for market order. Then you have the buy, sell button. I'll show you all of them. Okay, to execute the trade immediately according to the select button. So now the buy, sell button is for you to execute the trade immediately. Okay, after you have, so I'm going to show you all of this now. Okay, so now this is okay. All right, so there's an image here already, but I'm still going to log in. I'm still going to show you on my own account. Okay, so let me log into a particular account now. I'm going to log into a demo account. Okay. Authorization failed. Why? Why is authorization failing? Okay, so I've actually logged into, all right. There was trade running on that account, I didn't even know. All right, so these are actually what you see on your, this is the trading window. So you have your balance. The balance is your amount of money, all right, you have before you enter a trade. While your equity is your current amount while the trades are running. So your equity can be lower or higher than your balance until your trades are closed, okay? So we have margin, we have free margin, margin level percentage. I'm going to explain all of that in the course of the journey. You see all of them, they are there. All of these terms, if you just play around coming into Forex, you may not really know them, okay? So, and now these are the trades running. So at the bottom here, you see your quotes, charts, trading, history, and messages, which is more like the comments that you saw earlier. Okay, so this is actually the last place on this presentation for today, all right, which is trading windows. So if you look at your timetable, we stop today at trading window, all right? So, but before that, let me now go to, let me go to my phone to share my screen. Let me share my screen on my phone. I thought I was, what is happening? Sorry, I have to log in again. I was on the call with the phone, but the system logged me out, so I have to join again. All right, while the thing comes up, let me actually see if I know some names here. Okay, so let me see who is in attendance today.
Recording in progress. Recording in progress. Recording in progress.
All right, so I've disconnect audio on that one because if I have two devices at the same time here, they will be interfering with each other. Okay. All right, so let me now share my screen on my device. Let me share my screen on my device so that I can show you, demonstrate. Okay, start now. All right, so okay. So this is your trading window. Can you see my screen? Okay. So this is your trading window. All right. I just need response. You can raise your hand or type on the chat box to tell me you can see the screen I'm sharing. All right. Thank you so much, Carlo. Okay, so this is now, take note, when there is no trade running, okay, there is no trade running on your account. These are the only things you see. You see balance, equity, and free margin. Everything will be the same thing. All right, everything would be the same thing. Okay. Now, if you've actually watched the video, before in setting up your account, how to add your instruments and all of that, I showed all of that. Okay, if you watch the video, you'll see that I showed you quotes. Now, your quotes is where okay, so these are actually synthetics now that I'm showing you. They are not currencies, okay? All right, they are not currency, but I'll also show you currency before I leave here and other ones, okay? But these are synthetic indices. So now, these are your quotes. Quotes are the instruments you are trading, okay? So now you can actually trade from here. So let's assume you tap hold, if you press hold on any asset, it will bring up a dialog box for you at the bottom, all right? Now, it will show you new order, charts, property, market statistics, standard view. So let's assume you want to take a trade. So you click on new order. Now you have clicked on new order. Can you see sell, buy at the bottom of your screen? So if you click sell or buy at the bottom of your screen, that is called instant execution. All right, it's called buy by market or sell by market. It's called instant execution. That's what you are seeing there now, buy by market or sell by market. Now, there is something that is very key here. Before you take any trade, you must check your lot size. So can you see where my cursor is now? That is your lot size. We'll get to lot size. We'll get all of these things for you. You will know them. Okay, so lot size is actually what control your risk. Okay, so lot size determine the kind of what you carry to the river to fetch your water. Okay, so for someone who is going to the river with a cup, and someone who is going with a gallon, another who is going with a GP tank, and another who is going with a tanker. They are not coming out with the same volume of water. Okay? So minimum lot size is actually 0.01. Minimum lot size is 0.01. So here I can say buy now or sell. Now, that's number one, but I'm not buying, I'm not selling now. Okay, one thing I want you to look at again, look at the top where the cursor is now, where you see market execution. So market execution is you want to buy instantly, but you don't want to do market execution. You want to do pending order. You click, if you look towards the end of that market execution, you see a drop down. You click on it. Can you see now? When you click on it, you are going to be seeing buy limit, sell limit, buy stop, sell stop, buy stop limits, sell stop limit. Leave those two. Those last two are complicated. Leave them. Please, sir, can you help with WhatsApp link to join the group? I've tried. Not here, sir. Okay, so now, so let's do buy limits. I have clicked on buy limits now. Now, when you click on buy limit, you see this price where I just tapped now. This price is where you are going to put the entry price. Now, because the price you want to buy now, the price is still far. It's still far. It's selling. The market is selling, but you want it to still go down before you. So you put the price. And one thing about buy limit and sell limit, for buy limit, your entry must be below the current market price. So the current market price now is 95955 something. So if I put anything like that now, it will not enter 95955.2. You can see that it did not highlight for me to place. But now, if I now put 9494555, you can see place. Look at the bottom now, saying place. So let me place order now. If you have your take profit and stop loss, you can actually put it immediately. So let me place. I have placed the order. The order has been placed. So you can see it here now. Okay, the order has been placed. Now, what will happen is that when the price gets to that level, it will trigger for a buy. Okay. Now, you can actually come here and put in your take profit and stop loss. So you just press hold and you come to click modify. And you put in your stop loss. The XL is your stop loss value, while the TP is your take profit value. Okay. So let's go to instant execution now. So instant execution now, another thing you can use is, you see this plus sign here. Oh, sorry. Now look to your top. Let me show you. Now this plus. You see that plus sign? That plus sign I just marked with that red, okay? Now that's another place to enter, okay? So right now, you click on the plus sign. It takes you to this window again where you want to buy or sell. Then from that angle, that top where I click the plus, if you look at, you see a dollar sign. That dollar sign gives you the list of instruments you have available on your quotes. So you can now from here select the instrument you want to buy or sell. So let's assume we want to buy, let's say flip 1. We want to sell flip 1. Okay? So we want to sell flip 1. We are using 0.01. Current market price. All you do is you just click on sell by market. I have clicked sell. So you can see that this is on the positions now. It's on positions, all right? Now, if you look at the window again, before we were having only 3: balance, equity, and margin. And everything was the same thing, right? But right now, it has changed. The balance and equity is no longer the same thing. Now, the margin is 10 cents, okay? Free margin is $2,120.83, okay? Now, and it's not constant. It keeps moving as the market is moving. Now, this free margin is the money you have left to enter more trade. You have already taken 10 cents from this plenty money you have. So you still have this much to take to enter more trades. Okay. So we have entered this trade now. You want to put take profit and stop loss. You just press hold and you click on modify. Then you put take profit. So now let me put XL. So let me just say XL is 998. We are selling or buying. Okay, we sold. So our SL should be greater than, okay, so let's say 100,352. Okay, so take profit 997,100. Okay, so now if you make a mistake in any one, you see this modifier that is showing at the bottom, it will not highlight. When I mean mistake, because your XL for sell cannot be below the entry price. It must be above the entry price. Your take profit for sell must not be above the entry price. It must be below the entry price. Okay? So you click modify. Okay, so now there's somewhere we have not gone all this while. The second one here, you see, if you look at the bottom of the screen, you are seeing quotes, you are seeing charts, you are seeing trade, you are seeing history, all right, and you are seeing messages. So let's go to charts now. Now, this is my chart, okay? This is my chart. So we took flip one. I can now come here and select flip one. So this is another place where you can look. If you look under this red button, this one now, you can also do buy and sell from here. So this one, this buy and sell is an instant button. You just tap, you can tap it 1 million times, it will open 1 million page for you. This is another very delicate thing with MT5, but it has a way to hide it. So you don't always want to leave this place open because your phone can be in your pocket and this place is open. It will tap, 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 tap and buy, finish your money, you know, and it will help you sell when you don't want to sell. So you see this button on top. Let me show you. This button here. This one now, this one on top. All right, that's the one you use to hide it. So let me hide it. So I tap on it now, it's hidden now. It's hidden. So by this time, you will not be able to erroneously enter a new trade, except you want to enter a trade by yourself. So you want to enter a trade and you want to use here, you tap it again, it will open. You want to close it, you tap it, it will close. Okay, so now if you look to your top left, if you look to your top left, you see FSVO 20. That's the instrument that this chart is on now. Then we want to go to flip. So you click on it, it will list all the instruments available. This is another place you can use to enter. Okay, so let's go to that flip one. Let's go to that flip one. Flip one. Okay, so this is the flip one that we sold now. Okay, so this is our take profits. This is our take profit here. Where's our stop? These are our stop loss. Where's our take profit? So these are our take profits. Can you see it now? When you tap on it, it will show you. So what this is saying is that take profit is actually $9.72. I mean, stop loss is $9.72, while the take profit is $22.80. Okay? But do you know that you can still modify your take profit and stop loss here? But this one is too advanced for now. Let's leave this one. Okay? So, so this is all I needed to show you here for today. As the course goes on, all of this margin, free margin percentage bullet, there's also another area where individual ones will be explained, all right, and talked about, and you get a better understanding as the matter goes on. Then we will also be taking trades. All right, we'll be doing some practicals. I will call from the classroom and I'll just call you. I'll say, share your screen. The same way I have shared my screen now. I shared my screen from my phone. Okay, so you can also share your screen and you show us what you are doing on your phone. Maybe 2 or 3 persons, to just practicalize what we have learned, to show how far you have learned what we have been talking about. So we'll do that in the course of the journey. So this takes us to the end of day 1. I'm going to stop share here now. I'm going to stop share here now, and I'm also going to stop recording so that the recording will not be too long. Then we use the remaining time to answer your question, okay? So I'm stopping the recording now.